Hi everyone. So in this video, we will discuss chapter number 4, Introduction to Accounting. This is chapter number 4 in your grade 10 textbook of Business and Accounting Studies. Chapter number 1 to 3 discusses business studies. And from chapter number 4 onwards, you will be introduced to accounting. And in this chapter number 4, there are 4 subsections to it. 4.1, which defines accounting. 4.2, that gives you an idea of the objective and the need of accounting. Why do we need to do accounting? And 4.3 discusses business transactions. What kind of transactions, the exchanges that could take place in a business. And chapter 4.4 defines assets, liabilities, equity, income, and expenses. These 5 are called elements of accounting or elements of financial statements. Based on these transactions which we discuss in 4.3, based on any business transactions, there could be any of these elements that could arise. And those are called elements of accounting: assets, liabilities, equity, income, and expense. These are the basics to accounting. And if you go down further, there is a note there. In this book, accounting is referred only to include financial accounting. This is because when you go to your A levels and if you're planning to do commerce, you will come to know accounting has 2 branches, namely financial accounting and management accounting. As far as your O-level syllabus is concerned, you will be only discussing financial accounting. That is why they referred accounting to only include financial accounting. You will not be discussing anything with regard to management accounting. So let's jump into 4.1. If you see 4.1, that defines accounting. Accounting is a process of providing information to interested parties for their decision making. This is the plain definition that is given in your textbook. You know that in any business, decisions are important, right? So who are the persons that are going to make decisions? Those are called the interested parties. For example, in a business, owner is one of the interested parties. Manager is one of the interested parties. These interested parties are also referred to as stakeholders. You must have studied this in your chapter 1, 2, or 3. So accounting is a process of providing information to whom? To these interested parties for them to make decisions regarding the business. That is the simple definition. Why they have put accounting as a process? Because if you have studied ICT in your O level, you must know this. Any process must have inputs and outputs. With regard to accounting, accounting is the process which has inputs of transactions and events. Transaction, the business transaction and events that happens in any organization, any business organization, are the inputs to the accounting. And using those inputs will be converted into output, which are called financial information. And this financial information is very useful to the stakeholders to make decisions regarding the business. For example, an owner of a business may be interested in financial information of profit or loss, how much the business has earned as profit during the year. That will help him to understand how much of return has the business provided for the capital he has invested. So that is why they have given you the definition as accounting is a process of providing information to whom? To the stakeholders for their decision-making purposes. I've broke down this definition into 3 sections. Accounting is a process that you know because accounting has inputs and outputs to it. And the accounting process provides the information to stakeholders. Why? For them to make decisions. So accounting is a process of providing information to stakeholders for decision-making purposes. That is the simple definition you can come up with. Then if you move to section 4.2, objectives and need of accounting, right? Objectives and need of accounting. So accounting, the main objective, the primary objective, here we can categorize the objective of accounting into two. The primary objective of accounting, as discussed above, right, is to provide information to whom? To the stakeholders of a business, or you can tell interested parties, to stakeholders, right, of a business for decision making. For them to make decisions with regard to business, accounting provides information. It is better to say useful information, because useless information is not going to help to make decisions, right? To provide useful information to whom? To stakeholders. Why? To make decisions. So the primary objective is to provide what? Useful information to whom? The stakeholders of the business. Why? To make decisions, right? This is the main objective or primary objective of accounting. But in your textbook, they have given you secondary objectives as well. Let me get that here. Yeah, rather than writing this down, which will take me more time. Let me, okay. So this is exactly what is there in your book. So this could be termed as secondary objectives or needs of accounting, right? Secondary objectives. Why do we need to do accounting? The secondary objectives of accounting are to know whether the business has earned an adequate profit. Which stakeholder will be more interested in this type of information? Yes, that will be the owner, right? Owner of the business will be interested mostly in this kind of information. And another one is to know whether the financial position of the business is sound. This kind of information will be mostly needed by the lenders or creditors of a business. They need to know whether the business is in a good position financially to pay back their loans, the loans that lenders or creditors have provided to the business. The third one could be to fulfill legal requirements. This could mainly come from government side or legal side, right? Because any business organization, mainly companies, they have to follow some sort of legal requirements. When they are presenting financial reports, they must follow what is called accounting standards. So who will be mainly concerned? Government or the legal side of the legal side. So the secondary objective of to fulfill legal requirements comes from the interested parties of government or legal. They will be more concerned of whether the business organization fulfills the legal requirements or not. And the fourth and final one, to minimize disadvantages arising through omission and commission of transactions and to organize financial activities. This is kind of um, a business object, the objective of accounting with regard to the business itself. Because by doing accounting, you could minimize disadvantages of omission and commission. This one you will be studying when it comes to the suspense account later in your written. To minimize disadvantage by omitting some transactions, the business may understate or overstate profit, right? So to minimize disadvantages that arise through omission and commission of transactions, and to organize the financial activities by doing accounting, we can organize our financial activities. We by doing accounting only, we may know how much profit we are making and through which sources we are making profit and through which sources we are losing profits. So to organize the financial activities and to minimize that disadvantages arising through omission and commission of transactions, we need to do accounting. So the primary objective of accounting doesn't change. That is to provide useful information to stakeholders of a business for decision making. If you see it clearly, the secondary objectives states the useful information each stakeholder requires. See, owner requires information about whether the business has earned an adequate profit or not. Lenders or creditors will try to know whether the financial position of the business is good, whether the business is financially healthy or not. And government will be more concerned whether the government or the legal aspects of the business will be more concerned whether the company or the business organization fulfills legal requirements or not. Mainly for tax purposes, government look into that. And finally, for the business itself, to minimize disadvantages arising through omission and commission of transactions and to organize the financial activities, business needs to do accounting. So if they're asking you objectives or the need of accounting, the main objective of accounting is to provide useful information to the stakeholders of a business for decision-making purposes. If you look at the secondary objectives of business, the accounting, that will break down each useful information each stakeholder requires. The first one is to know whether the business has earned an adequate profit, that is required by the owner. To know whether the financial position of the business is sound, that will be required by the lenders or creditors. To fulfill legal requirements, because government imposes legal requirements. So to fulfill that, we need to do accounting. And finally, to minimize disadvantages arising through omission and commission of transactions and to organize financial activities. And that's all with regard to 4.1 and 4.2. We had a look at the definition of the accounting, and we had a look at the objectives and need of accounting. Thank you.